following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show. And it's kind of a waiting game, huh? So we talked about the VIX trade. Let's just get right into that. Volatility, again, just kind of spinning around here on its lows. At some point, guys, we are going to move up, and we talked about, whether the market's going to spike up or spike down, being the S&Ps. Really, just put a gun to my head, probably going to spike up first. Here's why. Just no technical reasons we're looking at breaking down here yet. It could happen. That's why I'm thinking the VIX trade might be the way to go. No harm done if we spike up. The VIX is not going to relax too much, and we actually could get a big reverse right after that happens. So it's kind of a way to cheat into that, taking advantage of ensuing volatility. So that's the way I'm looking at it. Not a lot of other ways to look at the S&Ps right now, in my opinion. Here's your 240s. Pretty serious. I haven't seen a 240-minute profile stay in force this long, especially in the S&Ps, literally in forever. So we started this profile on January 9th. We are 9 days out and still sitting below 240-minute profiles. But remember, here's the long-terms take precedence. Here's the long-term. We're just kind of spinning around. There's that 2277 high there. Getting through there would run some shorts right out of town. Let's take a look at the NASDAQ. Hope you guys are doing well in the den today. NASDAQ, hint of a new profile trying to appear, but again, not a lot of these things matter right now. We got this inauguration. I think the markets are literally looking forward to, the far left not taking a wrecking ball to it. Then we'll probably move on. This was disturbing to me. I'm going to show you a couple of things that I was really just waiting on, and they bounced decently before they've gotten to these inflection points. So I want to go through 4 products here. Again, disturbing, but I think you still got to sit tight and wait. Here's the dollar. Definitely got a little bit of a bounce there. There's that 99, 95, 96. And we didn't get down there, and that was also that kind of DMZ 99.63 down there. So we never got into it. I had a bunch of orders down there. We bounced a little bit, but I think we could head a little bit lower. I think we've got thank God we've got Dave from Clearwater. Hello, Dave.
Oh man, times must be tough if you're thinking the good Lord I'm on the phone.
This is the good life, man.
Yeah, no doubt. It's a good life, especially where I'm calling from today. Normally, I operate out of Clearwater, but today I'm in Daytona for some meetings here, and I got a killer hotel right on the beach, man. Beautiful sunrise this morning.
Oh, man, that is one cool area. Tom O'Brien and Tommy have got it made down there, huh?
I'm telling you, Tom and I talked about this when I first met. I grew up in Miami, and and it didn't sink into my head until years later that I grew up and, about 10 minutes from the beach, literally in a neighborhood where people would fly thousands of miles and spend thousands of dollars to come vacation. And, this is kind of where we grew up. So for me, there are other places, and I like big cities, New York, Chicago, that kind of thing. But I don't know. I can't get away from the beach. You know what I mean? I don't want to live anywhere where I'm not close to water.
And not a lot of people seem to know how cool the west coast of Florida is relative. East Coast, you grew up there in Miami, it's definitely, warmer in the winter and cooler in the summer because of the Atlantic over there. But that west side, I like the laid backness, of the west side, and seemingly more normal people. I hate to say that if somebody's on the East Coast watching this show.
Oh, Sean, ¿qué es tu problema con la ciudad de Miami, mi amigo? Come on now.
Okay,
Normal?
got it.
You're right, man. Miami's got a boatload of freaks, especially these days. And I don't mind saying that's my hometown. I grew up down there, and I love it down there. Don't get me wrong. But the reason why I like the West Coast of Florida is it reminds me of where I grew up back in the 80s, before it became a full-on international city where you had all the,
Right.
The billionaires, parking their money there because they're worried about Kirchner or Chavez or Maduro or whoever else grabbing their assets. So
Right.
they totally bid up every inch of real estate down there, and it's become super, super expensive. It's ridiculous what the house I grew up in, with my father's house, is worth these days compared to what he paid for it.
Yeah.
I mean, it's good for him. Don't get me wrong; he's not complaining. But it's if you're a 25-year-old person coming out of school or whatever, you're trying to make it down there, you need $150K just to live a middle of the road lifestyle.
Wow.
Because it's so expensive down there. But yeah, that's what I really like about the West Coast. It's more laid back, and it's big enough. Tampa, Clearwater neighborhood. It's big enough to have just about anything you want to do, but
Yep.
not quite so big that you've got the big city problems that you got down in Miami.
Yeah. Well, listen, man. What's on your mind this morning as far as trading goes?
I'm looking at the scanner. I don't know if I'm just reading this thing wrong, brother. So I wanted to call you because I'm like, hey, I looked at the time. I'm like, John's on there. I'm looking at on the scanner. I'm looking at the euro. Okay, and then when I put my cursor over the how we have the columns weekly, daily, 240 and 60.
Uh-huh.
When I put them over there, I'm getting prints on. Well, now it just changed of 105.59. Of the unfair high and 104.34 of the unfair low, and when I kicked on the levels, it was showing something else. So I was just curious if maybe that was a little delay in my internet or what you were seeing for the unfair high and unfair low on the daily for the euro.
Yeah, unfair low on the daily 105.43, that general neighborhood, and then up top 108. And some change, but I was gonna lament, and I'm sorry if it. Sometimes there's so many things going on with these servers. I mean, they're not meant to totally trade on the micro ticks because we have to actually, these things kind of refresh every minute or minute and a half, maybe sometimes every 30 seconds that the market's slow. But there's so much going on to output all this, so it's not going to be like to the microsecond. Flashing, so I apologize for that, but it gives you kind of the barriers to be aware of. But I was going to kind of comment and lament a little bit. I was getting into the dollar a while ago, and it hasn't really gotten down to the back of the truck up area, and then it bounced a little bit before it got there, and the euro kind of came off a little bit before it kind of got into that 108 area, which I was planning on hitting it really hard. So I'm just kind of looking at these as still a no trade. I think the euro could go higher and the dollar could go a little bit lower, ultimately before it's time to really re-entrench. Do you want to hang on or, hey?
Yeah, I'll hang.
Okay, cool. Thanks. We'll be right back, guys, with Dave.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. I think we've still got Dave with us. Dave, you there?
See me, amigo.
Okay. Yeah, I mean, last time I was on Lincoln Avenue, man, I did not hear English the whole way down the thing, you know?
There are people that are born and raised in that city that barely speak English because they don't have to.
Yeah.
Or, everywhere you go, the menus are in Spanish, and restaurants, everywhere you go, everybody speaks Spanish. And, yeah, that was one of the things that I also got tired of to some extent, was having to palabras español todos de la vida. And it's like, man, there is a lower cost, easier way of life than this.
Tell you what, though, like right at the top of Lincoln Avenue, away from the water, I guess where all those shops are, where you can't drive down there, man, there's just an insane little Cuban diner there that I had the best pulled pork I've ever had. I'm from North Carolina. Pork's king here. It was insane good, and it was cheap. I couldn't believe it. It was like a regular little diner. I don't know if it's famous.
Oh, sure.
Yeah.
Absolutely, and not only that, but if you're into, Latin women, there are more gorgeous women down there. You can't throw a dead cat without hitting some beautiful woman. I mean, they're just all over the place. Again, if you like that kind of thing, John, and
of course
I do. So I'm married to one, but yeah, for sure. Hey, one more question about the scanner, if I could.
Yeah. Mm-hmm.
So I'm going to ask this question within the context of the euro, since that's what we were talking about before the break. So unfair high on the daily is 108.00 is what I just kind of updated to, and unfair low is 105.43. So we've got, from what I'm looking at, a fairly wide profile, I would imagine. So I've heard you say, and unfortunately I can't catch your show as much as I used to, so I think I heard this a while ago, but I'm not sure, so I just want you to confirm it for me or deny it. On wide profiles, you say sometimes on the wide profiles you can look at the midpoint, the blue line. Yep. What do you think you call it, the top of the hill, where things tend to roll up or roll down?
Yep.
At what point in time in your mind, is there like a rule of thumb for how many days that would be defined as a wide profile?
Well, you mean, are you talking about the horizontal length?
Yes, sir. Yes, sir.
Okay.
Yes, sir.
Yes. So let me go back to the E-signal chart here for a second. So here's our okay, so this is interesting. Okay, so this profile that we're currently in on the euro in the long term, it's not exceptionally wide. Looking back at just kind of eyeballing the average height of the profiles in the most recent history. But one thing in particular, we marked a POC right at the bottom of the profile, and the algorithm does that. I mean, that's kind of rare when that happens, but when the algorithm does that, it means that that's a real serious line of defense on the resistance side and the support side if it's broken. I mean, there's just something in the algorithm that just marks it like that. I don't talk about that a lot, but a trade in itself, and I'm going to go over to this thing for a second, Dave. I'm showing it in the den. It's probably going to be a little bit of a delay to you, but this is a product that we're rolling out, and you don't see any prices or anything on here yet, but what it does, we wanted to put this into a kind of one-step, two-step, three-step process. And what does that mean? That means that as you go into the globe, and a lot of people here are going to do U.S. stocks, but I'm just going to go into Brazil for a second. So we want to say, okay, let's look at the global indices down here, and this is in a web container, so it's hopefully going to be it's going to be a little bit cheaper, and I think provide immediate solutions to people because the big scanner, I love it. I'll never stop using it, but for some folks, I mean, there's some learning curves in there, and there's a lot of variables going on. And I personally have to have everything in that big scanner, and I've kind of shoved it down everybody's throat as what I think people should use. And I use it every day. I can't live without it. But we've created this, going back to your, can you stay on past the next break too? Because I really want to talk about that. Okay. So this one, for instance, if we go into Brazil, it's going to put things in a map, and it's actually going to color code the opportunities. So it's going to be get your, country that you want to surf through. We're going to have, and they're coding this right now, three or four colors, which are going to be diving into the profile, trending, and on support or resistance. And those are going to be colored really nice, and they're going to be choice picks too. It's not going to be like all these different opportunities. So you might see in, what is this, 1, 2, 3, I don't know, what is this, 40, 50 stocks. You might see 5 good opportunities within this particular index, and those would be like a green, a blue, or purple, or whatever. And when you drill into it, so I'm going to Bank of Brazil, I'm going to click on this. It's going to give me the chart. It's going to tell me exactly what to do on this one time frame, the daily, and it's going to show me the buy, the sell, the buy, the stop, and the target. All right, I just picked this. This is not necessarily an opportunity. So that'll be something I think really nice to use. And when people want to choose their favorites as they see these things unfold, wait for this to come back up. This is on a stage server, by the way, so it's a little slow. Well, it's quite slow. You'll be able to save those as favorites really easily, and they're going to pop up right into your watch list. So it's find the country, click on the opportunity, goes right into the chart, and gives it to you buy, stop, target, boom, you're in business. And you can save those and monitor them. This is a little clunky here today, so we're just ignore this. They're actually working on this right now. But going back to the thing that I was showing before on the euro, this is why I like the big scanner, because it's going to give you more than just that one time frame opportunity, which I feel the dailies are really important. But this particular, when this border was crossed and closed above, Dave, right here on the euro, then it's kind of not, you got a contra trade opportunity, because a lot of times when these things dive back into the box and close back in the box, they've got a real good reason that they're going to explore the other side of the box. There. So this doesn't have to shoot all the way back up to 111.41, but when they close back in, a lot of times they'll go back and retest just like that weekly. And remember, these longer term profiles are pretty daggone important. You've got at least a kind of a range trade contra long-term trend down kind of situation here that you can ride for a while. And then you're looking down to the lower term time frames here to try to figure out where's the target. So the target I was thinking was 108 up here for that bounce. It still may be. I'm actually looking to never go long the euros as much as I possibly can, Dave. So I would be looking at, okay, we caught a good bounce. We moved up about 300 pips off of that kind of bounce off the bottom of the profile. And then I'd be looking at this 108 to try to lay the shorts on again.
Gotcha.
So, but I'm looking at that,
something.
trying to block out one side. Go ahead. Yeah. And that POC, that POC on the bottom, I forgot to mention this, that POC right on the bottom, as we've mapped it on the unfair lows. We'll talk about that when I get back. Is that cool?
Okay.
Okay, man. Bye. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Dave, you still with us?
Yes, sir.
Great. So I was just going to finish up before, you started talking about what you wanted to talk about just briefly. When these POCs are lined up on one of these inflection points on the outside of the box, remember this is the kind of so-called perimeter of the bell curve. I want to bring up a snapshot, Dave, if I can do that.
Sure.
Something that I wanted to show here. Let's see. I'll tell you what, I'm going to pull up. It's going to take a little bit to find this. Let's see.
While you're pulling that up,
Uh-huh.
What you saw a second ago, because the internet kind of seized on me for a second, I wasn't able to totally picture it. So that's essentially you're developing a capability that will give a buy order price point and a stop, and just generate that for you on any given instrument that you look at.
Yeah, what we did, the reason we did that is because, and I'm going to, I will get my act together as far as data on the next break, because I've got some things I want to show you, and show everybody. But let me start this. Let me start this other version of a scanner really quick. These are great questions. They're kind of, I failed to disclose information enough. So I want to show everybody this because we have had some really, really good success with this, with some folks out of Saudi Arabia that we built some special versions of this for. I'm loading it right now. Come on. And I'll be able to show it in the den here. But in a nutshell, while it's loading, here it is. Okay, so what we did, literally for a Saudi prince, we did this. On the Saudi Arabia, we basically created a nice algorithm that trades every stock in the index based on, a certain algorithm. So what it does is it basically keeps track. There's no signals right now on the current bar, but they're based around dailies. And what they end up doing is, we tracked everything. We kind of produced some results here. This thing has been super mega profitable, and it's based around the breadth calculations, which I don't talk about too much. I haven't talked about a lot lately because the S&Ps, in my opinion, are a non-directional trade right now. But a lot of times you'll see me reference these breadth situations. So this algorithm is a function of a couple of things. One of them is what's the tide of the market? What is the whole index considering, the profiles doing right now, and which side of the fence should you probably, weigh some underlying instruments? And then, when do you take off those trades? When does the tide start turning? A lot of that's focused around breadth calculations, but it's also focused around those inflection points that we just spoke of. So those inflection points are areas to pick battles, period. And when that euro, going back to that weekly, when that POC lines up with that unfair low, that's a stronger inflection point in my opinion. When you cross that border, you're probably going to have some follow through because it's kind of like the top of the mountain effect. You're going to roll down it a little bit harder. So I'm going to show something else, if you don't mind me just running my mouth here, Dave.
No, feel free. You know a lot more than I do, John. Feel free to educate me at any point in time you want to.
I'm trying to find a PowerPoint here that, let's see. Oh, let me just search for PPTs here. I wasn't prepared, and I should use the search function in Microsoft more often. Well, tell you what.
So while you're looking at that, I know you're capable of multitasking while you're searching for that.
Yep.
Is that algorithm, or when you were showing earlier with the the buy, the sell based on the breadth and all that, is that pretty much and I'm not asking you to give the secret sauce away, but is that pretty much the underlying technology behind the automated trade soft platform that you guys do based off of tests?
Yeah, I mean, again, trying to keep it simple and trying to know when to change the bet is a big deal. When do you go heavier? When do you just kind of keep it par for the course? But that Saudi version that I showed you, we had so much, success with that in that one algorithm that what we wanted to do in that HTML5 version of the scanner that I showed, which would focus on that, is we just decided, hey, let's use the same premise with the same calculations and give those buy, target, stop signals right on the chart. So it's find your heat maps that you want to get into, look at the colors for the opportunity. It drills down to the chart and just paints everything for you. And it's more focused on, actually we're running a real-time dynamically updating feed in that, so it's going to cost us a little bit more money, and it's going to be real like updates on the chart. Like you'll see the chart moving dynamically based on the real-time movement of Apple or whatever, so you'll be able to have that also. So you're going to have the signals, a way to find the opportunities that you like, I think, before you even look at those signals. And then that Taz says will just extremely focus on one thing, which is telling you exactly what to do, even though I think it's painted pretty clearly. Let me pull this up here.
When's it supposed to be ready?
God, last year. We should be able to release a beta, and actually Tom and I have been talking about this for a while, and I'm just wanted to get a couple more things done with it. I'm thinking we could release a beta within a week. It's literally like 60 days overdue right now.
And is this part of the, like, for the people like me who subscribe to the Taz scanner, is that going to be updated onto that, or is that going to be a separate service?
Actually, we've got an updated version of that coming out too, and I was trying to show it earlier, but I need to talk to Demantis, one of the programmers, about that. Let me see if I can show something on this PowerPoint here. Let me see if I've got something here. Nope. Let's see here. I'll tell you what, I'll find it on the break. I'm having a brain fart here. Let's see. This might be it right here. I wanted to just kind of focus on that bell curve situation. Let's see. Yep. Okay. So this slide right here, let me just blow this up from current slide. Okay. So remember, for everybody watching, these inflection points on the outside of the box, or the profiles, the unfair highs, unfair lows, are totally this premise. So they're, the meaty part of that bell curve is what these perimeters are all about. Okay, on the bell curve and on the unfair highs and unfair lows. So the same premise as, statistics 101 analysis is what we're trying to do with the profiles as you see them. So we'll be right back, folks, and I promise we'll let Dave speak. All right, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. I was actually just sending Tom an email. All right. So finishing up, Dave, for me, hopefully, the bell curve analysis is really the premise, in a sense, of the profiles. And these inflection points on the outside of this major meaty part of the bell curve is what we're generally focused on. And I'll just go through this, too. We put volume relative to price relative to volume, excuse me. So we're not doing the volume relative to time, which is what you see on most bar charts out there, and you pull up volume, you see volume relative to time. We're doing price relative to volume. So we're turning on its side and trying to figure out where do those, let me get rid of this. Where's the meaty part of the bell curve? And when these POCs, or the peak of distribution, as we've labeled it on the bottom, is down here, you have a really good shot here to take a shot. In this case, kind of diving back in the box. And a lot of times, we'll see that whole fair auction explored. I don't know if the euro is going to get back to 111 here, but I'm shutting up. There you go.
So hang on a second. You had the euro with the weekly. What did you show the weekly to be 111, the unfair high to be 111?
Yep. Mm-hmm.
Yeah, and then like 108 and change for the unfair high in the daily.
Yes.
Okay.
That's where, and again, I told you earlier, I was kind of, disturbed, I guess is the best word for it. I really didn't think we were going to pull back this hard before we got up into whatever, pull back hard or not. That's on a relative scale. But I was looking forward to getting up to 108. I know now, just put it this way. I know now, once we crossed that 105 and some change border on the weekly, and that really kind of was coincidental with this one down here, you're going to have a little bit of noise. You really, there's no way in the world you got to try to look at this as a short opportunity, for one, because you can't play defense, and the other one is odds are we're going to get some more follow through up from that weekly unfair low. So that kind of really put this, me and my short-minded euro stance kind of out in the pasture, at least for a little while. So.
No, I hear you. So, and again, because we crossed the unfair low, just using your theory for a second, or Taz theory, Logan theory, because we crossed the unfair low of 105.85. So again, with the comment being that when it gets into gets back into the box again, that it has a tendency to act like a price magnet and draw towards the top of the profile on the various time frames. Is that the thought behind that?
Yeah, well, I mean,
now we shouldn't look at short, and then we should wait until see what happens if it hits 111.
Well, again, I mean, I'm just bearish on Europe, period, all the time, and that's probably bad. But so I'm always looking for chances to whack it again. So 108 is that next chance. I mean, the next one up will be 111 and some change. So that I'm just kind of blocking out the long side. And I understand that contra, kind of situation that we talked about against the long-term trend down the euro, 105, getting back up there and retest, and that's a powerful setup. In fact, let me just give you the numbers there. The low of this week has been 105.79, and that unfair low is 105.85. So that was pretty daggone close. You're never going to be to the tick on these things. It's just the neighborhood. And on the longer term trades, I mean, like, I like to use options a lot of times too. If you're going to trade these, I wasn't expecting a really big bounce, so it's hard to get, really into a kind of an option trade that you kind of can let breathe on that type of trade. But it's not a bad time to look at some option strategies if it's a good long-term setup. Like if we got up into 111, I would be looking to not get shaken out of that trade on the short side. So I would and I'd be looking for much more downside movement. So I'd be looking at like shorting the euro with some in the money call hedges, possibly for more of let's let it go up. Who cares? I'm pretty fully hedged. Deltas are going to get way more in my favor if it goes against me, and I'm okay with that. But it could fall apart, and I don't want to get shaken out of the trade and get stopped out 3 or 4 times before it happens. So.
Which can be immensely frustrating for me personally.
Yeah, and it's something like I've got a straddle. I've got a strangle on the S&Ps right now, and I just did it. I kind of did some wings way out there. I don't even look at it, I at some point, and again, if it kind of erodes a little bit every day, that's okay. But if these S&Ps on, just on that mindset start, moving, I'll start taking a look at it. And if I can turn it into a free trade at some point by locking in some things, dismantling part of it, those are wonderful, I mean, and Tom would probably, say, hey, look, that's how you trade big money, I mean, and a lot of times people don't look at even their small accounts as if they were, trading smartly as like a, kind of a guy who's wanting to go home and bring his ball back the next day and play every day in this market. I mean, you have to kind of keep that mindset, and those longer term setups. I mean, we talked about this probably till people are tired of hearing it. You put these types of things on and just leave them there. And if they happen, they happen. You can make your whole month a lot of times off these types of setups. And then these little nickel and dime pain in the butt little stop out deals on the shorter terms aren't as bothersome because, you just made your whole month on the optimal setup with this VIX trade, in my opinion, right now. So.
Yeah, no, I hear you. So going back to the other one, so you think it might be ready in the next couple of weeks, the one you were showing earlier about 15, 20 minutes ago?
Yeah, I mean,
where it has the sell price or the buy price stop.
Yeah.
Whatever.
We should have a bait out in Tom's hands, literally, like in I hope a week. I mean, we're kind of right at the finish line here. Finally, there was a lot of things we had to do to get this to this stage, and I appreciate everybody bearing with us. But it's a different product than the big scanner. I mean, but we kind of have done an overhaul on the big scanner too. So.
Gotcha. All right, man.
But this one's, can access it off tablets, stuff like that, and it's HTML5, so it's pretty cool.
Gotcha. So you can do it on your cell phone or
we hope
an app on your cell phone. That's the hope there.
Yeah.
Gotcha. And again, I think I asked this earlier, but I'm just not sure I understood. The one that you're talking about right now, how does this differ from the TradeSoft application where it gives you the same thing, or is it just a different way about going about them with different algorithms, or what are your thoughts on that?
You're talking about the two different products?
Yeah, because you've got a TAS-based TradeSoft, through your TradeSoft website, gives you the buy and the sell point, the stop point, and I believe that's based off of TAS, is it not? I believe is that not your product? Did I misunderstand?
Yeah, that's kind of a separate deal. That's like bucket number 3. That's something that we kind of run a futures portfolio off of, and It's got the apps and all that associated with it. But I'm looking forward to really getting this HTML5 scanner out because I think it's going to be in the same neighborhood, and it's more stock oriented, because a lot of people, I'm kind of a futures guy, and I'm starting to realize finally that just like Larry probably, that a lot of people trade stocks. So,
Yeah. Gotcha.
well, listen, man,
Thank you so
thanks
much
for coming on
your
today.
time,
Okay, man. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the last segment here. And what we want to do is I wanted to show, we kind of, for new listeners, I guess I'm not pointing this out too often, but basically everything we talked about earlier with this scene, going into this scene, ultimately you dump into some easy, in my opinion, easy to use, what we call boxes, profiles, unfair highs, unfair lows, POCs. So this is, again, the meaty part of the bell curve. These POCs are based on the peak of, or the point of control, peak of distribution of the volume print within that profile. So in a nutshell, that's pretty much what it is. And then it goes into this scene. So, all right. So we didn't cover too many usual suspects today. I was starting out the show before Dave interrupted me. I'm just kidding. We talked about the euro and the yen and the dollar, and the British pound, in fact, kind of being in this relative sense relative to these long-term profiles. And this yen was kind of, it's very similar to that upside down that euro chart kind of in an inverse relationship. There's an inflection point. We didn't quite get there yet. The euro didn't quite get there yet. The dollar didn't quite get there yet. There's that dollar scene right there, and there's that inflection point. So I like this dollar trade from the long side very much. All right, we had this profile up here below price action on the long term. That's just bullish for the long term trend to continue, period. The back to truck up is 99.63 into 99.95. That DMZ down there, we've kind of bounced before it. Still feel like we can get down there. If we don't, dims to breaks. No trade. But thought the odds were pretty heavy down there, and that was, again, the yen, similar inflection points on the pullback, and the British pound on the rally here. So British pound got kind of close, but again, no cigar, and we just have to wait now. Okay. All right, so going back to the future side, S&Ps, you know my feeling on that one. CSI 300 just kind of hanging around. Daggone it, we got to restart that server really quick. Getting it up now. Here we go. So thought I'd restart it. Here we go. All right, so S&Ps, you know my feeling on that. The VIX trade, huge fan of that one. Here's the CSI 300 trade on the China A shares. I think we're just going to move up from here. I like the action on the bottom. Easily see 34, 33 up there on that one. Gold, again, you know, we talked about this trade stalling at worst here. Unfair is 12.11. We're sitting around 12.12 right now. Kind of waiting for the dollar to bounce and causing this to come off more. Dollar has bounced a little bit here. I like gold as a short from this area up here a lot. This might be one of those ones like we talked about before. You lay it on, you put the hedge on, and don't look at it. All right, put some alerts in on your execution platform and let it happen. 30-year, talked about these moves up into this area is going to be some resistance. It was around this 154 area. You do have some support, 151.20 on the 30-year. Woo! All right, guys, stay tuned for Larry. You will thoroughly enjoy it.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.